Yes. Welcome to another segment of the Student Trader Account channel, however you want to consider it. We're just going to quickly do a live session today. I wanted to do things a little different. So today we're going to do a live session where we annotate the market and we see if we have any opportunities to catch a trade today. Let's first start off with the daily and see what the daily is telling us, because we get a lot of information from here. So as we could see on a daily, we had a daily high that was recently taken. We can see right here that price swept this previous day high. So let's go ahead and mark our previous day high was swept. Let's see if that can lead to something, if that's going to show us any bearish push. Okay, I can see that price reacted with a long wick to the downside, and now it's pushing back bullish again. Okay, so let's see. What was the most recent structure we had? I can see we're coming from this low that led to this high that broke this structure. We've retraced. Okay, we haven't retraced all the way to the discount of this range here, I see, but let's continue. Let's carry forward, see what nearest price action. I see this low led to this high, broke this structure. We've retraced, and we have retraced to the discount level of that range. So the question is, can price now push up here into this supply above? Let's see. So let's go down to the 1 hour. What do we see? So along the 1 hour, we can see there is a long range of consolidation here. We can see this is a consolidated market. We can delete this now. We can see this is a consolidated market. Price is within this entire consolidation box. What else we see here? This looks like, is this equal highs or was this swept? Okay, looks like price slightly swept this high. Let's mark this as a swept high so that way we don't assume that this is a equal high. So this high was taken here. We had this high swept. Just for context, today is December 10th. It is currently 9:13. We are in the New York session. Okay, so the last thing we've had right here, I can see, was this break of structure. This was the last bearish break of structure we had. And then price came here. Looks like yesterday we had this medium inducement. Okay. This happened at about 10:10, I believe, at 10 a.m. So this medium inducement is what's fueling this bullish push. Okay. So the buyers have stepped into the market. So we can see there's this imbalance right here, this gap imbalance. Let's send this to the back. We can see that this gap imbalance was tapped in 1, 2, 3, 4, about 4 or 5 times. So I can expect price to come lower, especially we're in this consolidation range. Let's see which side gets taken out first. We probably won't pick a side right now. We'll wait to see which side price gives us first before we attack. We can see that this Asia low as well is not yet taken. So we can anticipate that something big is about to happen here. So let's go down to the 15-minute and see what we're working with. Okay, so we've got our execution window. Let's place our kill zone, which is at 12. We've got our kill zone. Okay. So let's see. I know at 8 a.m. usually we have a trap that the market sets. So let's see what happens at the New York trap. Let's go down to the 5-minute, see how that came about. Um, okay, so price gave us an unintentional movement to the downside, giving the illusion that it was going to be bearish. Okay, right at 8 a.m., we've got this unintentional movement here. Price came here, gave this idea that we are bearish, swept the liquidity of that unintentional movement right here. That was swept. Now the question is, when price gave this fake out, we can see that there's this trend line right here. It left a trend line liquidity. Okay. Let's see. What do we get from this trendline liquidity? Okay, so we can see that at the bottom of this, there's an order block. This also swept, or is this an equal low? This looks like an equal low. Okay, so this is an equal low. So price left an equal low at the bottom of this zone. Okay, we can also see there was a consolidation range right here within Asia. So we're just building the context. Mind you, we already know that we are in a consolidation zone, this entire box. So we're not necessarily looking for trades within it. We're trying to watch the market set these traps. We're reading the liquidity that is being generated. So we can mark this as a smart money trap. It's being that there's liquidity around it. So price could react from it simply to go sweep liquidity and come back and take that zone out. Now let's quickly get into structure real quick. Let's quickly mark out structure. What do we have? We can say we had a high from the inducement. We can say this high led to this low, led to this high, led to this low, led to this high. Okay, being that we had this high, led to this swing low, led to this high, then led to this low that's lower than that high, that previous low, I apologize. Let's see, is it? Yes. So this low is lower than this low. So let's go ahead and remove the internal price action so that we don't confuse ourselves and we actually have the market structure correct. One thing that's very important is when you're marking out market structure is that you don't confuse yourself with anything that's not within the outside of the structure. These are all internal structure. We don't even want to confuse ourselves with that. So we know we've had what? This high originally, if we go from the starting point, high, low, high. Can even remove this one. So high, low, high, low. This one broke structure. Okay, so we can actually take this low, move that low here, being that this low led to this high that's higher than this previous high. So now this becomes internal structure. So once again, high, low, high, low, high. The market induced this previous low, though we had a break of structure, which was what led to this inducement. Perhaps price can be bullish to the upside. Bullish to where? Let's go to the 1 hour, see if we have any supply. Okay, we have this long wick here. There's a lot of information inside of these types of wicks. When you see these big wicks, there's a lot of information here. So we'll mark this as a POI, point of interest, just to see what the market does there. So let's go to the 15-minute. We can see there's a 15-minute order block here. Let's go to the 30. Let's go to the 5. Let's see what's working here. We had highs that led to low that break structure. So we had some series of liquidity here. We can also see that we had a consolidation range here where the low was taken, but the high was not. The low was taken, the high was not. So we can see price to come up above, sweep these highs, mitigate here, maybe give us a lower time frame confirmation to sell down. Or come down, take this low, mitigate this here demand, my apology. Mitigate this here demand and give us a push to the upside. So right now, we're not going to force any trades. Today, we did have, let's see, what did we have today? What news? Today's Wednesday, December 10th. Okay, so we had unemployment at 8:30. And our next news is at 2. So that makes sense as to why prices in this consolidation, it's stalling time, building liquidity for news to do what it wants to do and sweep levels of liquidity. So let's go see what this 8:30 news did. What did it print? So 830 was about right here. So unemployment simply gave us um, this indecision candle, a very wick high, a wick low, closed as an undecision candle. So the market is not sure what it wants to do yet. So let's follow the narrative so far of what's happening internally. Okay. We've had this high, had these lows. So we're just right now, we're in between these two trading range. This is our trading range, our dealing range, as I like to call it. This is our 15-minute dealing range. We don't need to pick a side in these types of sessions. We don't need to pick a side. We simply need to allow price to give us a direction confirmation, especially when you're in a consolidation range. We know that the top side needs to be taken here and the bottom side needs to be taken here. So there's no reason to jump the gun, pick a side right now and try to attack the market. The best thing we can do is wait for price to show us its hands by either taking a side, giving us a lower time frame confirmation, and we can sell down to the bottom, or taking the lows, giving us a lower time frame confirmation to buy to the top to take the high side. Simple as that. No need to do too much. On a higher time frame, we can see that price is simply wicking and consolidating right in this area after coming to this discount range. So we don't know if it's ready to go up yet to create a new high. And we don't know if it needs to go lower to create lower lows, especially from this perspective of this low that led to this overall high. As you can see, price hasn't retraced to 50% of it yet, or the 6.18. Because that low that led to this low that led to this high caused this here break of structure on that 4-hour time frame. So we haven't had a complete retracement to this range to fulfill bullish intentions if that's what we're supposed to have. You know, we've had this channel that was built through break of structures, break of structures. This would allow price to come and sweep the lows of this channel, take the liquidity here and push higher if that's the narrative that price is to follow. But we don't need to make that guess. All we have to do is follow the market structures and we'll know. So for now, let's go back to 5-minute. And let's get a little bit closer to price action. Let's see what's happening here. We can read the market together. So this high, let's see this 5-minute low. As you know, I like my 15-minute, 5-minute range and my zones because they tell a lot in the story, and price tends to respect 15-minute highs and lows and 5-minute highs and lows. Okay, so we know this was our equal low and we've had this wick here. Cool. So what do we have here? High, low, break of structure, high, low, break of structure. So let's mark these things as we move. You want to get good at marking your zones because that's how you narrate a story. If you don't, then it's going to be hard to tell the story. This was a high, this was a low, failed to break this low. Instead, price gave us an inducement low. Okay. Excuse me. That was 2. Price gave us this inducement low, this buyer inducement, to give us confirmation that the buyers are pushing this market and led to a bullish break of structure. Now, is that a bullish break of structure for the entire move? No, just for the sake of this push here. Then price came back down and broke to the downside. That same low that led to this high that broke structure, price came back down again and BOS to the downside, leaving a equal low. So what can we say? Even in here, we have a consolidation zone. From this high to this low, where the equal low is created, you have an internal consolidation. Now, granted, price wicked slightly outside of it right here, swept this high, tapped into this imbalance. Let's see if this imbalance is an order block on a higher time frame. Okay, so it's a large imbalance. 1, 2, 3, big 3 pattern candle. So we're not looking at that as a zone to sell or buy the market from. It's just overly too large. Let's see what it's about. About 5.5 pip. It's not the largest, but we're in a consolidation range. So I'm not interested to sell the market from that range. So we'll mark this as our imbalance. Plus, if you're taking an imbalance trade, for example, you want to cover the overall highs. And in this situation here, if we were to cover the overall highs, our stop loss will be way up here. That's a 14 pip stop loss. We're not taking that. And if you go and you just cover this, the high of the imbalance, what does price normally do? It either fills the imbalance or it takes the imbalance out entirely. So to take this, granted, yeah, you may say, well, look, if I would have taken it just to the smart money trap, price would have given me a 1 to 3 and whatnot. It's just not a high probability trade. Granted, yes, you can see that you've seen that, oh yeah, it's working in that direction. I would have hit 1 to 3. Sometimes you have to be able to walk away from low quality trades. This is not an A+ setup, is what I'm trying to say. This is one of those low quality trades that, you're just trying to entertain the market. You just want to be a part of a move. That's not a professional trade. You know what I mean? You want to position yourself for trades that aligns with structure, a trade that aligns with your confluences, all of these things. You want them to make sense. So what else can we see? We have this trend line here that was printed during Asia. And we can see that price have not taken the entire trend line. The entire set of Asia was also a consolidation zone, as you can see here. Price consolidated here, wick slightly to the downside, and pushed up. So already, guys, you can see the many levels, the many generation of liquidity that was made during this session alone. This morning, it's just been liquidity, 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 all in the market. You have ranging market all right here. Slight price wicked out of the lows. Wicked out of the lows, came to the high side. It's a lot of liquidity here. What else do we have? Buyer inducements. Let's go down to the 1 minute actually. So that way we can start reading the inducements of control. So let's start with Asia session and see what Asia told us. Okay. So this morning during Asia, we've had price came high, low, break structure, retrace, mitigate, low, break structure, and induce these levels here. So price gave us an inducement of these levels right here. Okay. Okay, let's follow along. So this inducement, we've had this seller buyer inducement telling us the buyers was stepping into control of this market. What else do we have? Do we have any more inducement? We have a build up here that was not induced. We had another buyer inducement here. Price built up. This low that led to this high that broke the above Asia high. Price came back, induced it. This was during Frankfurt. We got this buyer inducement once again. Okay, we reached these levels. What did price do? Price once again gave us a build up of trend lines, came down, induced these trend lines, and it led to, once again, another break of structure. So far, if we go back, we can see, what do we see? We can see from this medium inducement that happened yesterday, that buyers have continuously, we've had this build up of liquidity, price came down, swept, induced the lows of all this liquidity that was generated, pushed high, causing this break of structure here, giving us a bullish break of structure right here. What else happened? We had another inducement that pushed higher, another build-up inducement that pushed higher, breaking these highs. This low that led to this high, that led to this low that couldn't break, price then came again and gave us another bullish break of structure. So within this consolidation range, what we can see is that the buyers are in control. The buyers are pushing the market high. So what happened once we reach these levels? Okay, what can we see? We can see that price simply induced with a slight wick, inducement high, with a slight wick above this level. Did it take the top of this consolidation range? Very, very lightly. Does that mean all of the liquidity above this range is taken? No, because no one's stop loss, not everyone's stop loss is resting just at this little tip. Most people's stop loss are up here, up here, up here. So there are more liquidity above. But what can we see? From this point, sellers came into the market. They decide to step in and take control. So we had this high lead to this low. Price consolidated a little bit here. You see the levels of consolidation here, up, down, up, and then finally made a decision to push to the downside right here. So we can say that the highs of this range has not been taken, only the lows. The price pushed down here, giving us a equal low, which was then later induced. Price couldn't push up, push right back down. We can see sellers keeping control. We have this trend line that was later swept by the buyers push because the buyers began taking control to the downside right around this range. Once price came in, reacted from this here order block. Perhaps on a 3-minute, it will look more clear. Correct. So on the 3-minute, we have this here order block. This was a low, though it's in the consolidation range, so we know it's still liquidity. This was a low that led to this high that broke above this structure. Price came, reacted from the zone, pushed up, give us this built up, came down, induced. Buyers pushed up, broke structure. Price came back down once again, reacted now from this here 3-minute demand, creating this equal low, and pushed up again. So buyers are trying to maintain control, as you can see. They're trying. So as of right now, we're in a tug of war between the sellers and the buyers. Okay, so let's see. Let's see what happened here. Okay, so all this liquidity that we just seen was induced. The high of it was induced. This entire buildup was here induced by the sellers to show control once again. So what is this telling us? The sellers have stepped back into the market, and are they going to come to sweep this trend line to continue this bearish trend? So what do we have here? We have this level of buildup, this trend line level as well. Price came, gave us this inducement, this minor inducement, and can this lead to a break of structure to the downside to show us what's called like the domino effect, basically price continuing to lead to break of structures to the downside? Because we had this low, this 1-minute low led to this high that broke above this structure. price did come back down now and cause this change of character. So can this possibly be a change in the narrative? Now we know that this is still a bullish break of structure because this was the 5-minute, the recent 5-minute high that was pushed. Now on the 1-minute, it's a BOS. On the 5-minute, it's actually a minor inducement. So we can't qualify this as a bullish market, saying that price has broke structure here and then broke structure here to the upside. Based on the 1-minute, that's not the narrative. We're gonna listen more so to the 5-minute and the 15-minute, not the 1-minute. We're only listening to the 1-minute when it comes to our execution, our entry model, the way we're trying to get into the market, not to confirm the entirety of the structures. All right, so let's go back to the 3-minute. What can we see? This change of character that happened here. We've had this inducement. We want to see price continue the bearish narrative. So I like to bounce around on different time zones just to kind of keep reading what's happening. As we already said, we had this high, this low, this high, this low, break of structure, this high, this low, break of structure, equal lows, inducement. So technically we can say this high, this low, this high. Perhaps we can come down and make another low, simply because these are all internal structures. But for the sake of discussion, we're going to leave them here for clarity when reading the 1-minute. So let's go back to that as well to see who is holding control. As I said, reason I wouldn't want to sell from this imbalance is simply because your stop loss would be way up here. On top of that, you have this consolidation above it where the highs was not taken. It's liquidity around it. It's not a high probability trade. At any moment, price can say high, low, high, induce this low and push higher to take this out. It could come deeper into this imbalance, or it can come and finally mitigate this here to then push to the downside. So much can possibly happen from this range. Mind you, keep in mind, we are still inside of a 1-hour consolidation range. All of this is happening in this 1-hour consolidation. So there's no need for us to force anything in the market besides wait for price to show us its hands. We have a clear understanding of this was the last low that led to this high that broke structure. We understand that price retraced and has reached a discount range. This discount range was mitigated multiple times, not once, and price shot up. 1 time, 2 times, came back down 3 times, 4 times. And this is just on a 1 hour. You go to the 15-minute, maybe we have more, but let's see. 1 time, 2 times, 3 times, 4 times, 5 times, 6 times, 7 times. Now this is a retail support. What are the retail traders seeing? Okay, price is respecting this level. This level is going to hold. So they're expecting the next time price comes here, they're going to buy up. That's liquidity. Price is going to come down there and take them out. Give them a fake reaction, take them out. So we don't want to be taking trades from these levels. That also aids our confluence to know that this level will fail. That price would most likely come and give us a reaction somewhere in these levels. I mean, we also have a 15-minute demand here. Price could even come down to this level and use this level right here as an inducement. Structural inducement. Structural inducement simply to then give us the bullish move up. So this low that led to this high that broke this structure could be swept for price to then mitigate this here 15-minute zone and then push up. So the narrative is still is still unfolding. So we don't want to jump the gun and try to predict what trade we should get into right now. Not every day is a trading day. And look, remember what I said. In order for this inducement to be confirmed as a true inducement, What we want to see is price lead to a break of structure. If it doesn't lead to a BOS, guys, it's not a true inducement. If this inducement of these wicks does not lead to a break of structure of this low that led to that high that caused the inducement, narrating that this inducement price has gathered enough liquidity from these candles to push it down and break this low, then it's not a true inducement. Because then what we could be looking at is that this low within the trend line that led to this high that broke this structure is where price is reacting from. And that could lead to price taking out a few levels here. What else do we see here? Trend line. Trend line above this level. A lot of liquidity being generated, guys. A lot of liquidity being generated. So you have to be careful. You have to be careful. You don't want to just be trading just because you see a candle moving. You don't want to just be trading just because you want to be a part of the market. It's not necessary. This unintentional movement that happened here, we've only taken the liquidity of the sellers that got into it. But the buyers who was used to sweep that liquidity, they haven't even been taken out because you can see they were invited in during a trend line. And look at the time they were happening: 8:20, 8:25, 8:30, 8:45. Not even during our key time window. Right when our key time window happened, what did we get? Low, one more unintentional movement to the high side, sweep to the low, retest, retrace, mitigate, expansion, change of character. Push out, retest, induce. Can we get a push down to break structure? Until you get that narrative, you can't assume that this market is buy or sell. You can't. You just have to annotate. Just have to follow the inducements. Let's see, what do we have here? This was the unintentional movement at the opening of the market. All right, market opened at 9, gave you this unintentional movement, came down, swept the liquidity. Actually, swept the liquidity here, pushed up, retrace, mitigate, expand. Gave you a change of character. But then it ran into this, I would say this is a smart money trap, simply because it's inside of this trend line. I don't expect price to hold this. I don't expect anything in here to hold, actually, guys. Even this demand, none of this will hold. These are all going to be liquidity later when price is ready to take the downside. We just want to know which side is going to be taken out first. The minute we have the confirmation of which side will be taken out first, that's when we can say, okay, it's time for me to choose a side. It's time for me to say, okay, I'm going to buy, I'm going to sell. But for now, we don't have to do that. So let's continue. Let's continue. Meantime, I want to do a quick post for you guys on Instagram. If you don't have me on Instagram, follow me at The Suited Trader. Again, it's at The Suited Trader. I post a lot of content about the market. I post a lot of content about the trades, the things that I'm reading throughout the day. As for today, obviously, I'm doing a live session for you guys. I wanted to give you a live session of me in the market, the reads that I make, the way that I annotate the market, the things that I look at, so you can kind of get an idea. But I'll try to see if I can make more of these types of videos. Okay. What's up, guys? Suited Trader here. I'm currently working on a video for you guys right now of today's session. It is a live session recording that I'm doing. So it will be posted on the YouTube channel. Make sure you do check it out so you can see the narration and the way that I read the market from start to finish. You'll see the zones that I like, the markings that I like, the patience that I execute with, and the precision. So be sure to follow, like, and join the channel in order to keep up with all of the new content that's coming. What's up, guys? Suited Trader here. Okay, so let's get back to the action of what the market is doing. Remember, I told you this is the reason why I wouldn't just jump the gun and try to sell from here. I wouldn't jump the gun and sell off this inducement. A lot of people will just sell the minute they see an inducement or buy. Just have to be patient because this price could easily trap you into another consolidation range within this range. So it's very important that you execute with patience. Very important. A video for you on currently working on a video for you. I'm currently working on a video for you guys right now of today's session. It is a live session recording that I'm doing. So it will be posted on the YouTube channel. Make sure you do check it out so you can see the narration and the way that I read the market from start to finish. You'll see the zones that I like, the markings that I like, the patience that I execute with, and the precision. So be sure to follow, like, and join the channel in order to keep up with all of the new content that's coming. I'm currently working on. Okay. And look at that. You see this bullish push? Price came back and now took this inducement high, did another inducement. Remember, there was trend line above it, so it's no surprise. This is the reason why you don't just rush. Because who's to say now, if we go to the 5 minute, who's to say this isn't just high, low, low, and price comes up higher to create another high. And then you took this sell off, this imbalance, price takes you out because you were so thirsty for a trade. Because market opened at 9, you saw an imbalance, you saw this high led to this low, breaking these little internal structures, you ready to sell. You ready to target this trend line because you said, oh, price has this trend line, price has these levels, equal lows. You start ready to sell down the market, not realizing on a higher time frame, 30 minutes, 1 hour, you're in an entire consolidation range. We do not trade consolidation range. I repeat, we do not trade inside of consolidation range. I won't. Because until price takes one side, if the high gets taken, yes, we can trade to target the lows. If the lows get taken, we can trade to target the highs. But we're not just going to trade to try to pick a side. It's not what we do. Try to execute as professionally as you can, as precise. You want to follow the liquidity, follow the inducements, target the liquidity, and follow the inducements is what I mean. Target liquidity, follow inducements. Okay, what else is price giving us here? Let's take a look. Whilst taking this high, price still gives you another trend line, letting you know it's not done with these price action. It's giving you a trend line to let you know I will come back down once again. What happened here? We've swept it. This liquidity is taken. Is that going to give us a push down now? Let's see. Price knew some people will sell from this imbalance. It was a very obvious imbalance. You go to the 5 minute, look at the size of it. Price knows that everyone wants to sell down from here. So what happened? It's going to target. It's targeting their liquidity. So let's see. Or is price simply going to induce this high and go back down? We don't have to pick. We don't have to force it. All we simply have to do is just watch the market. Okay, so now we can say that this trend line got extended. More reasons as to why the smart money chart will fail. More reasons. A lot more confluences for it. Why? Because now it's within this trend line or within another trend line. Let's get back to the 1 minute. Let's continue to narrate and watch this price action. Guys, this is just reading price action, reading the liquidity is calm. I promise, it's very calming because you feel like you have a reason why you're doing this thing. Okay. Perfect. There you go, guys. So I do get a lot of messages on Instagram from people who said, "Oh, I can't afford a course." I don't sell course, by the way. I don't have a course. And not to say nothing wrong with selling course. I'm just not at a place where I want to consume that much time selling a course. I create content, give you guys free value because that's something that I could just do on the fly. When the time comes, if it's my calling to do so, have a course teach trading at a different pace, then yes, perhaps that will be my next phase. But as of right now, that's not something that I am focused on. But to get to the point, I get messages on Instagram where people are asking me, "Hey, I'm serious about trading and I'm trying to learn. I can't afford XYZ or this person's course or that person's course. Do you think you can help me?" I said, "Sure. Join my Discord. Follow my YouTube channel. I put live content, free content out that you can learn and watch and kind of pick up from me and how I trade. And little by little, you'll have a better understanding of the market." They get in the Discord, they're not active. They get in the Discord, they're not asking questions. They get in the Discord, they're just idle. You don't see any actions from them. How are you someone who is serious about learning how to trade? You're not actively making an effort to learn. You're not fooling no one but yourself. You're not lying to no one but yourself. And those people, I don't spend and invest time trying to teach individually. I just put out the content. If you watch it, you watch it. If you don't watch it, you don't watch it. If you learn, you learn. If you don't learn, you don't learn. That's more so onto you. But if you watch the content, you have questions. Being a part of my Discord is where you get to speak to me and ask me these questions. I answer everyone's questions. You know what I mean? So this is where you want to take advantage of the opportunity. This isn't where you start to say, "Oh, well, I'm not going to ask. I'm not going to do this. I'm not going to do that." If you're being shy, you're not helping yourself. You're not helping your situation. You have to be outspoken. If you're sick of here, guys, this is our Discord. That's trade analysis. It's posted in here. I annotate what I'm seeing. Trading questions, it gets asked in here. There's questions being asked that's being answered. We have our community where we speak, where everyone's chatting and we talking about the market. YouTube, I drop all my YouTube links here where you can keep up with what's going on. I even post psychology, give you books and things like that for you to read. So if you have any, there's no reason for you not to be active in a Discord that is designed to help you, that's designed to help you succeed in the markets. I just don't get it. I just don't get it. But anyways, let's get back to the market. So what do we see, guys? Let's jump back to the 5 minute. That's why I like to switch up on time frames so you can keep an eye on what's happening. So the last thing we said, we had this 15-minute high that came from this 15-minute low that was created by this 15-minute low that swept above this consolidation range. The liquidity of that consolidation range or this high led to this mitigation here that did not break the low of the Asia low, nor did it break the low of the previous day low of the New York session. So what can we see here? Let's quickly look at what session highs and lows are left and where are some more liquidities hiding. Okay. Clear as day, what do we see? We can see that we have a London high here, a New York, another London high here, a New York high here. All of this area is a ranging of liquidity. Do we have this whole entire? Yes. As you can see, why we have this whole zone marked as consolidation. Look at this. Liquidity of this high, a New York high resting next to a London high. Anytime you see this combination of a New York high and a London high next to each other, liquidity. As you saw down here, London high with a New York low was targeted, taken out. So always remember that. This was the London. This was the New York. Both of their lows was resting next to each other. Price came, took them out. Same right here. London low, New York low. And where does that lie? All within our consolidation. So we have structural highs consolidations above, structural high consolidations underneath. It's nothing more to say besides patience. This is some days you don't have to trade. Some days you just have to let the market generate the liquidity for you that you will then be able to come sweep later. If we allow the market to pick a side, then mitigate a high time frame supply or demand, depends on the side it takes, we can execute from a place of confidence, knowing that when we get our lower time frame confirmation to sell, if it comes to the supply, when we get this lower time frame confirmation, we can execute with precision. What does our lower time frame confirmation would look like, if you may ask, right? Here we are. We would look at it like this. We want to see price mitigating this supply, for example, within our key time window at 9 a.m. before 12 p.m. within that time frame. We want to see that mitigation happen within that time frame. Next, we want to see whether it's a supply or demand. We want it to be either in this supply or in this demand, not from an internal where price is in the middle of nowhere, no man's land, and you're looking to buy or sell. We don't entertain any of that. Those are not A+ setups. Third, we want to see a change of character or a break of structure. So you know what that looks like. Price comes in, mitigate. We want to see a high that lets to the low, fails to break the high, low. So this high led to this low led to this high led to this low, change of character. Price may come back, retest, give you this break of structure, and you enter from here. You enter your position from here or from here because price can easily come and induce this high. Price can easily come and induce this high, mitigate here before selling down and continuing the move. This is what we would want to see. Something in that nature, right? So let's remove that. Or another thing we want to see is a two-leg protocol. What would that look like? Okay, price coming in, boom, 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 taps into this, creates a lower low, comes here, fails to take that, takes this zone. Okay, now we enter from here. That's a two-leg protocol. This is where we are looking to enter. Why? Because you had one leg, retracement, two leg, breaks underneath the low that led to the high, that failed to break the previous high, price broke underneath it. Either it breaks underneath the previous low that led to the overall high or induces it. That's what you want to see for confirmation. An inducement of it or a break of it is sufficient to take that trade. So let's say this was, in this case, a break. In that case, you can then take this two-leg entry from that zone and sell down the market down to these structures. So this is one of the entry models, as you see here, what we want to see, a two-leg protocol, okay? And last but not least, perhaps an impulse candle. Maybe price comes into this zone, same way, pushes his way into the zone, deep into the zone, comes down, creates these huge gap right here, pushes down, and now is retracing. And you see this high as liquidity, and it gives you an impulse candle that was created here that broke this low, and price comes and retest it. And that will be the entry. So these are some of the entry models that I like. Some of the ones that I like to see price comes into. The change of character happened here. Price gave us a impulse candle. What would that look like? Perhaps you get one bearish candle like this, one bullish candle like this. As you can see, price is taking out those imbalanced traders. That's what I was trying to tell you guys earlier. You don't want to force trades. You don't want to force any trades, guys. Okay, so let's go. So let's say you get a great candle like this. Boom. And then you get a candle that engulfs it like this as an impulse candle, right? So let's move it over so you can see for clarity. Right here. And then right here. Sometimes actually it'll even be like this actually. And then this will be the impulse candle that caused that break. So you had this bullish push right here of a candle. And then you had this bearish candle right after it come and engulf that zone to the downside. Then you can say, okay, I'm going to take this trade from the impulse candle. Let's say there is a wick, actually. Let's even give it more of a clarity. Let's say you have this wick to the downside, and then this one to the upside. And then this one, say you just have a slight little wick like this, maybe very minimal. Might not even have any wick. Maybe the wick might be to the downside like this, right before price push back up. In this case, then yes, we'll take it from the wick of the impulse candle to the wick of this one. And we position ourselves to sell the market from this retest and take it to the downside. This will be our impulse candle. Okay, so as we see here, so those are the three type of setups we want to see coming outside of our high time frame supply to confirm that buy or sell. Very simple. Now, what do we want to see? We want to see all three of these things happen. If we don't get all three of this, a high time frame supply, a mitigation of it within the key time window, and in one of these three entry models, why are you entering the market? Yes, it may still have possibly gone to your TP, but that's not a high quality trade. It's not a high quality trade. And then you also want to have liquidity to target. Obviously, you want to see some smart money traps that are being left behind. Like for this, for example, you want to see a smart money trap. You want to see some trend lines left behind. Yeah, trend line right here. You want to see some even use your fib retracement tool to see if you are in a discount or a premium where you're trying to sell from. So when that setup happens, you get your lower time frame confirmation. As price is retracing back to your zone, you can easily use your fib from the high of where it mitigates to the low where the retracement is happening. Is the zone you're trying to enter in a premium or in a discount, depending if it's a buy or sell? That gives you extra confluence for this zone. And next, I like to use my pip range to see has price maximized the um the fib the pip range of the day. Has price completed the pip range for today is what I like to use my fib. So if the EU or GU has done over 40 over 40 pips, then why would I want to try and take a trade when the market has already done over maximizes daily or session pip range? I'm just gonna let it go. But if it's only been like 5, 10 pips and it mitigated early in your session, then you know you can count that you can catch a 26 pip, 20 pip move with this price action. So here we go. Now that you've had this, last but not least, pro trend. This is the reason why I also have this mark at the bottom. You want to make sure it's a pro trend trade. So if you're in a buyer's market, you want to allow price to come to your high time frame demand to actually buy. Or if it already came from a high time frame demand, let's say you did it today, you bought from the high time frame, and you know you're still bullish because it's a buyer's market. The next day come, then yes, you want to wait for price to come back into another premium or another discount to continue to buy. You don't then jump to sales unless you reach a high time frame supply that proposes a sell to come back and take out the high time frame demand. But other than that, you continue to trade pro trend because that's going to be your highest probabilities. All right, so now let's get back to the action. So what do we have? Just like I narrated to you guys. That's why I won't sell at these types of imbalances. It's too high of a stop loss that you would have had to set up for. It makes no sense. So now the same people who had high hopes thought they were going to catch a one to something because they had these lows, these equal lows, this retail supporting resistance, this trend line, XYZ. They created all this narrative as to why they expect price to respect this zone. Look what price did. Fake them down. We used this level to push right back up, right up into their guts to take out what? This consolidation range, perhaps. We have the high of this range. Didn't I tell you there's liquidity above the zone? Why are we trading it? It's just being patient. When you know the liquidity areas that price is going to target, you don't have to force it. But when you've taken enough liquidity and the market mitigates a zone that it's going to use to go take the other levels, that's when you join the party. To go take out the other retail traders that were invited, the trendline traders that were invited, the break and retest traders that were invited. All of the difference of the narratives, that's how you want to see it. Now let's see, is price going to give us a break and retest of this zone here? So the break and retest would look like this. We want to see if price is going to invite break and retest traders. Let's see. So we want to see price retrace down to this level and respect this level, inviting the break and retest traders into the market so that they believe, oh, price broke this high, came back, respecting it, and it's pushed, invite them into the market is what we want to see. So that price can come up, take this consolidation range, maybe come out and take them out, or push all the way to our supply, give us a lower time frame confirmation to then sell to take out the low of this consolidation. But we have to see if this happens within our key time window, because let's go to 9 o'clock. 9 o'clock open right about here. So let's go from this low right here. This is already a 18 pip move, which is not even done yet. To the downside was 11. So we're already at 30 pips, right? 18, 11, 29 pips, my apology. We already had 29, close to 30 pips so far just within the session. I can't say that this is gonna be a session where we catch trades. Let's mark out the last hour because we cut off at 11, but at 12, but we can say this is the last hour right here. Okay. Hmm. Okay. I see in one of the other Discord, the other communities that I'm in, a lot of people hit stop loss today. And I can see why. Because a lot of people were entering buys or sells within these consolidation range, even during London. Now, granted, London did give a massive sell, but it didn't quite give an entry. It did this inducement high and dumped, consolidated, and left everyone. Left everyone. Once the price is already gone, there's no need to chase it. It did not want anyone to participate in this sell. Hmm. Yeah, let's take a look if it did give any. No, mm-mm. Nothing concrete. High, low, high, induce, push down, somewhat of a two leg, but consolidated and dropped. Two leg finished up down here. Did not come back for anything. Just left. Let's see. Yeah, yeah, just left. Okay, back to the action, guys. So what do we have here? This high still not yet taken. And price is just here. We want to see a retest. invite these break and retest traders here. It hasn't done it yet. Right now, it only created an imbalance. So we want to see it come deeper, invite these break and retest traders into the market. Let them know that this was a good move. This was a true move, is what we want to see. So far, we can see the buyers are still maintaining control, though they were taken out all through these areas. When price came back here, mitigated, gave this inducement, pushed out, came back, mitigated this range and pushed out once again. Buyer continuation of control we had here. So it's not too much of a lot of buyer inducements that's leading the control. It's showing me more bullish price action. Okay, maybe right here we could say we had a slight build up. We had a build up here where price build up a little bit of liquidity here and induced with these equal lows. Excuse me, this is very ugly. Price induce and leaving these equal lows and push the market up. So buyers stepped in, took control once again here, pushing, leading to a break of structure. So we want to see if this supply turns to demand for price to mitigate, push up again, perhaps come back, then take this low and give us another push. But we're not entering any of this. We're just watching and narrating the market, but we're not entering. We're not going to favor any side. Just because price is making it look like it's about to take the high, it can easily induce this consolidation high and then begin to look for sells. So we don't want to force anything, guys. We don't want to force any trade. Okay. I will answer this question in the trading questions tab. So I'm trying to clean up the general chat. Okay. So again, for me, in regards to the demand. Okay. Not that. Oh, so okay. So here's a question that was asked, guys. And I want you guys to see some of the questions that gets asked in the Discord. So um this user says, hey Sauce, about yesterday's EU buys, why didn't we wait for price to tap in the extreme demand, which made the imbalance? And they're referring to this trade here from yesterday, where price came back into, let me go to a higher time frame, where price came back into this zone here. They're saying, why didn't we wait for this demand here for price to come into here in order to buy up? Why did we take the buy here? I called a buy yesterday from this zone here up. Where was it? Yeah, actually it was within this zone here up to this range. So the question is still is why didn't we wait? So let's answer that. The reason we didn't wait is because we got a medium inducement. Price gave us a medium inducement and gave us lower time frame confirmation. So it's not that we did not wait. We simply got a medium inducement within our key time window, followed by a lower time frame confirmation to let us know that price was not going to continue bearish for now, for the remainder of the session structure. Otherwise, without the medium inducement, we would have waited for price to give us an entry for sales towards that extreme demand. Okay. So just to give you guys context on what he's asking once again. So this trade right here, once price gave us this medium inducement, just to give you more context on a medium inducement is when a previous day structure or a previous day low, such as this one here, which was Monday's structure, gets induced on a 15-minute time frame or higher. So on a 15-minute time frame or higher, so a 15 minutes, 1 hour above, more so 15 minutes to 1 hour. When you get to 4 hours in daily, that's more like a major inducement. It has a different weight to it compared to a medium inducement. So let's continue. What we see here. Let me see. Okay. So what we see here, price came to the downside, induced this low within our key time window. This was at 10 a.m. Once this inducement happened, and it's important that it happens within your key time window. When this inducement happened, price gave us a reaction. So on the 1 minute is where we were able to identify this. Remember I said I like the 1 minute for my executions. So on the 1 minute after this medium inducement happened, what you get is that this high, this internal high that led to this low was then broken, similar to that two-leg protocol that I told you about. So price broke this structure here. And above it, we had this here trend line. I'm sorry, we had this equal highs here. These were equal highs. And we had this consolidation range where the highs weren't taken. So in this area, we knew that price wanted to come take the high of this zone. So on the 5 minute, what did we have was a 3 pattern impulse candle opportunity to enter the market, which was right here. Where is it? Right here. This happened within our key time window. It's very important that you execute within the key time window. So this 3 pattern candle, you may see it as, I don't see it the same way as an imbalance. I see more so the imbalance where it's simply a series of candles, like 4, 5, 6, 7 candles, and price leaves a gap, and it's more like, okay, this is an imbalance. Like 1, 2, 3, 4, and then that's like, okay, an imbalance here, an imbalance here. These are more like imbalance. But when you get a 3 pattern, 1, 2, 3, like this, and it leaves you 1, okay. This to me is relevant to a structure. So what happened? We took the buy from here, and we ended up taking partial TP at these levels, and the price eventually came out and took us out of the position, which I can actually show you guys here. This was the trade that we took yesterday. This was the trade from right here. So price came, as I said, this was the consolidation of it. That price hadn't taken yet, all this range right here. This was the equal highs above it. Price reacted from this here supply. So if I go back to the 1 minute so you can see more clear. Price reacted from this here 1 minute supply. Right here, there was this zone. Price reacted from it to come mitigate us, and we took the buy up. So this is that trade. Let's move this over. Yes, this is that trade right here. As you can see, consolidation, price came up, retested, pushed down. This was the retest, the push down. This was the little consolidation that was marked right here, as you can see. And we entered from here, bought the market up to this range was where we took partials. We hit 1 to 3 pretty quick. 1 to 3 is where we take our partial credit. And this was where the trade went. We entered here, pushed up, Remember what I said earlier, you want to use your fib tool when price is coming back to the zone you want to enter from. Make sure you're within a discount or a discount, whether it's below 50% or 6.18, to confirm that this zone has validity, that this zone can give you that reaction. If the zone happens to be like in a 0.32 or like high above 50%, don't force that trade. Chances are it's going to fail. So this was a situation. So we had one to three T partial taken up here, and then the rest we let run. After price did an inducement here, it eventually came back, as you can see right here. Once price made that inducement, it eventually came back. So that was the purpose of that question. He wanted to know, or they wanted to know, why we didn't simply wait for this extreme to be mitigated to take that buy. And as you can see what I showed you, that's the reason why price gave us confirmation. We saw the liquidity to target, and we knew that we had a medium inducement, which is a catalyst for a shift in the market direction. As you see, since the medium inducement, we have not broken this low yet. That doesn't mean that price is going to forever be bullish, because simply based on what I'm seeing, the market wants to go both high and low within the next few sessions or days, perhaps, because who knows, this is a big consolidation zone. So we don't know how long it's going to take to get it out. We have many news coming in this week to facilitate price action, giving it enough liquidity. We had today's news, as you can see, FOMC is a big news that's coming into there too. Tomorrow, we also have unemployment claims that's coming out. That's going to be another push. And then Friday is the only day we don't have much news. So as you can see, by Thursday, Friday, we should probably have already taken a side in the market to know where we're going, right? So let's get this to the side. No worries. In today's recording, I'm doing a live session recording. I will address the context of the trade and details for you. Be sure to catch it. Okay, let's carry on. So let's get back to the price action, guys. What do we see here so far? What's been going on? Remember what I said earlier? Let's not jump to conclusion. Let's not assume that price is now all of a sudden going to take the high side because it's broken above the imbalance. Instead, what did we do? We got a mitigation of this order block that's resting inside of this consolidation range. As you can see here, price just came back, tapped into it. Now, it's not a true order block. It's not a true order block. It's still a consolidation range, but price is pulling, inviting early sellers into that zone, inviting them into the zone to believe that this is where the sells will happen because this high led to this low and broke underneath these range, and Asia lows not yet taken, this trend line. They're charting to say this is where price should sell off from. But we know that's not true. We know that both sides of this liquidity needs to be taken. So we're just watching. Some days it's okay to just be the watcher. You don't always have to be the trader. Be the analyst, the one who's annotating, be the referee, who sees everything that's happening and waiting for the perfect time to strike. You're a sniper, not a gunman. You're not running around here with an AK-47 and automatic semi-auto. No, you're a sniper. You make sure the precision is there. You make sure the wind is precise. You make sure you're calm, that you breathe. That when you do execute, it's from a zone that has high probability. Does that mean you're going to have a 100% win rate? 100? Of course not. But by being precise, narrating your target, waiting for the perfect time to shoot, it's a lot higher chance of you hitting your target versus, it's like, think about it. Trying to shoot at a moving target with a semi versus shooting at a target that's not moving, because it came to a zone where it slows down and it's going to give you a lower time frame. Now you can be precise. You can execute once you see your setup. All right, so let's continue. So now we see price came, it didn't even invite the break and retest traders in. It just came and took them out because break and retest traders are, so we're expecting buys here. As you can see, there's this is one movement of the break and retest traders right here. This was the break and retest traders. The minute price broke under and they put this wick, they all bought right here. That's why you see these bullish candles. That's why you see this bullish candle. That's why you see this bullish candle right here. These two bullish candles, that's break and retest traders immediately trying to push the market up. Okay, let's go. It's time to go back up. No, 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 no. Intention. You see this candle? Impulse candle took them right out. Right now, the market is just going left and right. It's like a yo-yo right now. It's just sweeping liquidity like a vacuum. And you want to be a part of this massacre? You sure about that? When you could simply just wait. You can simply just let the market pick up liquidity, generate liquidity, build for you that which you need to secure a big RR trade, to secure your money. So we continue. We continue. What do we have here? We've taken the high side of this consolidation range. Within this range, does that mean we should now look to target the low of this range? Before I answer, I'm gonna let you think that through. We know that within a consolidation range, both sides needs to be taken. What we have here is that within this consolidation range, the high side was taken. Now the low needs to be taken. And earlier I mentioned, we want to wait for price to take out one side first to give us confirmation before we can trade to go take out the other side because we know that's what it needs to do. So my question, once again, being that this high side was taken, is this now a valid reason for us to look for a sell to take this low of the consolidation? Ask yourself that, answer that within yourself for a second, and I will give you my feedback in a minute. Okay, so the answer to that question is no. No, no, no. If we did not have this overall consolidation range, then yes, you then look to sell down to take this low. Not from this zone, because this high is still not yet taken, but you can see if price gives you lower time frame confirmation, i.e. chain of character, break of structure, a two-leg protocol, some sort of entry model to say, okay, this is correct. Right now, all we're getting is just a drop. This could simply just be a retracement, mitigate, push up again. Because of what? High, low, well, high, low, higher, low, higher high. Who's to say it's not just going to come make a higher low and then higher high again? So you want to wait for that confirmation if this was the only consolidation zone for us to sell down and take this one. But because it's not, you're still within this big one. This is just internal consolidation within the external consolidation. We're waiting for the external consolidation range to be mitigated or induced or violated, one side of it, to then trade the other side. We're not trying to take a small little heist, run off on a quick little 1-2, 1-3, just to 1-1, just to kind of say, oh, we got to trade today. No, there's no need to be greedy. We don't have to. We don't have to rush at all. So what do we see here? We have this zone. Now there is a trend line underneath it. Can we say price is going to respect this zone? No, we can't say. Instead, we watch. So we can say this is a demand. Yeah? Let's go to the 5-minute real quick. So 5-minute, let's get back to our structure. High, lower low, lower high, higher high, higher low. This is internal. Obviously, this is the higher high, but this is internal. Higher high, higher low. The price give us here. Internal, higher high. Can this come and give us internal higher low? Or will price come down and induce this trend line? Take out this smart money trap, take out all of these. But there's no telling. We can't jump the gun on that. And even if price do, for us, that's just data. That's not a reason for, oh, we missed the trade or oh, we missed the move, etc. That's not. That's just data. Because we know what we're waiting for is either the high side or the low side to get taken to find the best entry, the best trade that we're gonna get. So anything that happens where price continues to take either the high or the low of the external is the data. Seeing that price took this high first was data. What data is that? Data that tells us that now the low might be next for price to potentially maybe come down and take the bottom side of this range, right? So that's still data. We want to stick to the fact that not every day you have to take a trade. Some days you're just gathering data. You're just loading up your sniper. You're just adding ammo. You're just cleaning out your tools, waiting for when that right time comes to execute. So now price is coming to this zone here. It's creating this idea that it's going to respect it. So it's starting to consolidate right above the zone to give this mitigation look, maybe push out. Maybe, right? Has it touched that zone? No, but it hits the imbalance in that zone. So let's go to 5 minutes. Perhaps it's a 5 minute zone or a 3 minute. It's a larger order block. No, it's not. So on the 1 minute, we can even check the two. So on the 1 minute is where the order block lies, right here. Price is giving a reaction. So let's see. We could delete this now because we see break and retest traders was taken out. So will narrate this session for about another 20 minutes. At 11, we'll cut off because at 11 o'clock, London session would have ended. There won't be enough volume in the market to create any big moves. We won't need to continue trying to narrate the market. Instead, what we'll do, we'll end the call, and tomorrow we'll pick up again from where the market ends at the end of the day. And we want to see, I want to get us to the point where if one side of this consolidation ranges, the external, is taken out, how we will execute a trade to take the other side out on a live session. I want you to see that execution and get that confidence of why being patient is better than trying to rush and take trades and have this retail mindset. Instead, have more of a liquidity trader mindset, a precision mindset. You'll have better returns. So price gave this fake out that is going to be bullish. It could potentially now come and do this low mitigate here and push off. That's still not our trade. That's not our setups. This is not a high time frame demand. This is in the middle of no man's land, in the middle of a consolidation. We're not, even if this leads all the way up to here as a RR, we're not interested in that. That's not what we're interested in. And you have to be okay with that. You have to be okay to walk away from low quality trades and wait for the best probability trade. Let's see. What else can price give us here? So you can see a little consolidation right here in this area. So you know price is gonna still take out this high of it because it popped down to the bottom of it. A wick slightly above the high, but popped down to the bottom. So you know price wants to take the high of it now. Now it doesn't have to be this one push here. It could be after, or price could easily pop up here, mitigate this here supply, internal supply, and push right down through this zone because there is trend line underneath it. That could easily be the move. So let's not jump the gun and assume. Let's let price do its thing. There's nothing here for us. We're just watching a massacre at work. We're watching price just, I don't even know how to explain it. Just mottoing people left and right. So I'm responding to a member right now, in regards to what I said earlier to you guys about a person who's very adamant about wanting to learn how to trade and being in a tough position, and they have access to all of the material that I put out, my Discord, etc. But yet they're not active. They're not in there asking questions. They're not in there communicating with the other traders in the community. They're not showing up to all the Zoom calls when I do have live Zoom calls. Mind you, I'm giving you free value. I'm doing things that people are charging thousands of dollars, hundreds of dollars to learn from. Now, that doesn't mean that I don't value my time or that I don't want to charge for the value I'm giving. I'm just paying my dues. I understand that before I take the seat of the position that I want to be in, it's okay to give. It's okay to provide value. It's okay to allow people to know that I can learn from this person from a place of pure, genuine, just want to give. Now, when I'm at the level that I aspire to be, and for anyone, I'm not at my final form. When I continue to learn like you guys, I continue to study, I continue to show up, narrate the market, back test, um, journal. Like I continue to do these things. Why? Because I want to be better. Like this is my journal. I write my journal. Some people just journal online. I write my journal. I write my journals of my trades because there's something about writing that hits different than just typing your journaling of your sessions. I like to write about it now. It's that's just the level of work that I put in. So I say that to say, making these contents, making these videos for you guys right now, is coming from a place of joy. It feeds my heart to be able to give this level of content to you guys based on the level where I am in my journey. Um, and who knows, maybe one day it may change. Maybe one day I might have a small community of traders that I want to focus on. Maybe that might be a mentorship program where I charge for my time and my knowledge and my experience. One day that'll be where my time is more valuable and I want to put a price on it type of thing versus now. It's part of my journey. Teaching helps me remind myself as I go. So it's coming from a place of joy. So let's get back to this. What did I express? That price gave this build up to fake out, to invite early buyers, to then come down, induce them, sweat them out, to then mitigate this low, this order block. Now, does that mean this order block will hold? Let's take a look. Candlestick anatomy. We had a strong bearish candle that dumped in there. Let's go to the 3-minute. How did it look? Okay, there was some rejection. Strong, what is this, like a doji, or I think the retail call it? Okay, so we had a strong bearish candle comes into this zone. Could price push back up? Personally, I would want to see price take the zone out. But what I want to see doesn't mean it has to work out, because price still has this liquidity above here to take. So because we've mitigated this demand, if this demand gets respected, this is now a smart money trap. Even if it's not respected, this is still a smart money trap, because we've already mitigated this demand. We are coming from a supply though, so this too should fail. This zone here too should fail, coming from this high that led to this low that broke these lows, and prices reacting from it, even though it's a consolidation range high. The fact that price respected it should allow price to violate this zone. But remember, we're still within this entire consolidation. So a lot of price action here that happens will be very choppy, very unpredictable, very unorthodox. So it's okay. That's why we don't trade these types of choppy markets. We let price do what it needs to do, because it's going to move aggressively in certain ways that it doesn't do when institutions are stepping into the market. Institutions are giving you the confirmation that, hey, this is where we're going. Are you coming or you're not? It's very simple. You just have to be able to read it, know when they're making that move, because that's what we try to trade like. I'm not gonna say we are the institute. We try to trade and think as much like them as we can. We try to execute the market as much as them as we can, because that's what's going to allow us to catch the higher RRs, to catch the higher probability trades, to get those quick response, hit TP quick. We don't want to be in a trade for 4 or 5 hours all day. No, we want to get into the trade. 30 minutes we're in, 30 minutes we're out. We enter, between an hour we're out. Most an hour and 15 minutes, we want to be in and out of a trade. But between 15 to 30 minutes should be our average time. We in, price push, hit our TP, we're out. Okay, so as you see, price is still moving in this range. It's still consolidating. So we're probably gonna end the call in about 15 minutes, simply because, as you can see, the market is just ranging right now, and we got, what is it? It's about 15 minutes until London checks out of this session. So I don't expect nothing significant to happen. I don't expect us to see any major move that's going to give us a big RR trade or anything like that. So only thing I would expect is for the market to continue doing what it's doing, inviting sellers, inviting retail. This is just invitation of retails. Some smart money traders as well are being invited. For example, this range, smart money traders are seeing this low led to this higher broke structure. This low led to this higher broke structure. Smart money traders are looking to buy up from here. Day 2 will become liquidity in this zone. I could even mark it as smart money trap, because this zone will also fail. So all of this is generations of liquidity being generated. Even if price respects the zone to push up, it will become liquidity later on because of this trend line. We just don't want to participate in any type of zones that has liquidity all around it, unless it's a situation where we are pro-trend and price has given us confirmation within a lower time frame to take the trade. Then we can say, for now, price is not interested in this liquidity above or under. We're just going to focus on the liquidity that we're targeting. So those are the only time we will take trades and that's such. But for now, We're just gonna let the market do its thing. And yeah, just to close it out, guys, if you enjoyed this session, if you learn a little bit from reading this session, anything like that, drop a comment. Let me know how you felt about the session. Let me know what you've learned from this session. Let me know what you've picked up. It will allow me to make more content for you guys that allows me to share what I know. But I need your response to be able to do that. I need to know where you, the viewers, those of you guys who are watching it, the questions that you have in your mind, I need to see those in the comment section or message me on Instagram so that when I'm making these videos, I know somewhat of what to cover. Because like I said, this is not me creating a course. I don't have a course to say, oh, I'm making a start to finish type of thing. I would much rather utilize the overall questions that I see that you guys are having and answer them, whether it's through a live session, whether it's through a back test session, whether it's through a trade that I took. I'll find ways to bring you that value, but I need you to also engage with me. So like, share, if you know someone who wants to learn how to trade that don't have the ability to get course, they just want to learn how to trade like a bank. If you're one who already know how to trade and you just want to sharpen up your execution, follow the channel, continue to keep in touch with what we're doing, and I hope to continue to bring you guys value. Without further anything else, we have about 12 minutes left. I am Sauce. It's been your boy. I hope you enjoy this session and keep being disciplined and precise with your executions. Peace.